joining in on the show. Hi there, Hemang. Good to have you on board. And the standout performer yesterday in trade was clearly those PSU stocks, which had a pretty strong run up. What's your assessment as to how they've moved and what's the outlook?
Yeah, good morning. So yes, we've seen big correction day before, and where stocks actually corrected anywhere from 5 to 15%, and the index itself was down about 3%. And yesterday it was good, smart pullback. So our take is that one really needs to watch for some sort of a consolidation when it comes to the broader market, because when an index has gone up by, let's say, 35-40%, 3 or 4% correction is actually a very, very small. So there is always some possibility of consolidation or correction, and one needs to be a little mindful of that. However, at the same time, the index or the large cap stocks continue to show a lot of resilience even when we had the volatility. So I think for the time being, at least near term, it would make more sense to focus on some of the large cap banks or the large cap stocks where we are seeing a fair bit of stability and strength. Even IT is coming back in a major way. So I think it would make sense to focus on these spaces.
Hemang, hi morning. Have to talk about what's going on within the railway and the defense as well as shipbuilding names, right? And let's pick up railways first. For someone who's looking at a long-term time frame and, as a value investor perhaps, do you sense that they also should take some profits off the table right now?
I surely think so, Aisha, because we've seen, if you see last about 6 to 7 months, the PSUs, the railways, the capex, and ancillary theme around this entire PSU has actually gone up quite a lot. And in terms of valuations, in terms of market cap, definitely it looks a little, frothy. So I definitely think that no matter 2 year, 3 year, this theme may look great, but when people don't take out profits or create some liquidity, they end up kind of getting into a bigger trap. So I definitely think that it makes sense to kind of take the profit off the table and look out for better opportunities and better entry point.
Okay, fair enough. That's the view coming in on all of those railway stocks. But what's the outlook as well when it comes to the recent deal as well that we've seen culminate, for instance, with Bombay Dyeing, the biggest land deal in Mumbai? What do you believe this is indicative of? And, thereby, what would be your outlook on real estate stocks, Hemang?
So massive deal. Just to put things in perspective, the market Bombay Dyeing today is about 3,000 crore, and the company is sitting on a debt of almost about 3,000 odd crore. So this two put together, the total enterprise value would be somewhere close to about 6,000 crore, and against that a single deal is about worth almost 4.5 to 5,000 crore. So that's a massive one. I think it's a big monetization. The only thing that remains to be seen is, after this particular deal is over, what is the intrinsic value or the assets that Bombay Dyeing is left with, and what kind of additional value creation can be there. So given the focus on the reality and the outlook, I definitely think that this is a great deal, and maybe there is a scope for another maybe 15-20% kind of an upside in Bombay Dyeing stock over the next 12 months.
Okay, that's the take coming in on the Bombay Dyeing stock. Let's address what else has been holding up in the market. And Hemang, clearly one believes, or rather many experts that we've been speaking to say that it's time to bet big on banks and even IT for that matter as a defensive play. If at all you are bullish on banks and IT, what are your top picks here?
Very positive on banks. I think it's in between it had underperformed, but now there's a catch up which is at play. The incremental cash reserve ratio relief has come in from RBI. I don't see any major challenge on the growth or the NIM front per se. So large cap continues to like SBI, ICICI Bank, HDFC also after a long time is showing a little bit of traction. So these are the names when it comes to the large cap names. Mid cap, I think we should focus on two names. IDFC first, where we had an entry of big investor. Also, Federal Bank is something that is delivering consistently good performance. So I think these are the names that one can really go with in terms of banks. IT, Surely, it's a value play, a little bit of zigzag here and there based on what's happening in US markets. But I think TCS on the large cap front, and to some extent, some of the small mid cap names, Tech Mahindra, Naukri, these are the names where we continue to have a positive bias.
Kunal, you're also betting big on IT, right? Any stocks that one could go long on or buy at this level?
Well, I think large cap IT stocks are something which have underperformed, so they could pick up pace. And I strongly believe that the likes of TCS, Infosys, they've given signs in terms of price volume breakout. So they could maybe not underperform going forward. Of course, the price returns over the return expectations over here could be significantly less as compared to the mid cap IT names because of the beta nature. But then when you're looking at strong breakouts on large cap names, they are more sturdy and stable as compared to the mid cap stocks, which can be a lot more volatile. Even the likes of Tech Mahindra, which has been looking very attractive at the 1200 mark when the stock had given a breakout. L&T Infotech, Mindtree, Coforge is something which has looked quite exceptional on the charts. Birla Soft, I think the stock has gone through a mild correction the last 3-4 days. So I think if there is another correction of maybe an 8% or 10% for Birla Soft on an average, that could be a classic stock to buy from the mid-cap IT names.
All right, let's move on then and hear it out from Rakshit Ranjan and Marcellus Investment Managers and Rahul Shah of Motilal Oswal, sharing some of their top fundamental stock ideas.
TCS is in our portfolio of large cap consistent compounders. And then we have LTTS, Tata Elxsi in some of our other portfolios. And again, disclaimer, clients, families, and ourselves, we have exposure to these stocks. So these are some of the names on which we have increased our positions over the last 12 months incrementally. Because the concern of the market was US going through recession and hence let's exit IT, etc. That gave us some opportunity, some pockets to increase exposures in some of these areas, which we've done, wherever we see the resilience being there to the businesses.
If we look at the entire cap goods as a place, so I think my preference would be more on the terms of the private players, rather than BHEL. So maybe at this price, I would avoid BHEL. Maybe at correction, I would look at it for a longer term play. But if I have to look at something like Siemens or something like ABB, though the valuations are expensive, but I feel that there will be a safety and the risk versus reward would be quite favorable from here. So I think again here the returns could be also a very moderate kind of a return. The stock has done well, so I think these are only 12-15% compounder from here. So that is what it looks like. So my sense is I think again Siemens and ABB remains the top bets in that entire sector.
Okay, Hemang. Let's be specific in terms of why SBI has underperformed. Even though yesterday also PNB, BOB, everything is coming back. But in this year, SBI has done nothing.
Yeah, so Nikunj, if you see a last quarterly number, there was clear pressure on the NIMs and the numbers were not that great. Now, when the stock has run up, let's say in the last about 1.5 years, 2 years, it's been one of the best performing names in the banking. So you go through a phase of consolidation when the quarterly numbers are not looking that great. Also, partly because PSU typically you don't have too many options in the large funds. Don't necessarily go out for smaller names like PNB and so on and so forth. However, like BOB and Canara is something that they have also invested in. But there are very few options when it comes to large investment. So there is going to be a case of a little bit of over ownership. So I think these two factors would have led to some sort of an underperformance, but by no means SBI is looking weak or, it could just go through this kind of an underperformance for an extended period of time. I think it's looking quite ripe for a big run up. And as we see more clarity on the growth and quarterly numbers are there, people would surely come back.
Kunal, as a cluster, should one look at PSBs in the near term or the large private banking names?
Well, very tough one, Aisha, because both of them are looking attractive in their own spaces. Now, for example, if someone is playing for a turnaround and looking out for large cap names, then I definitely believe that the private sector banks fit the bill quite perfectly over there because many of the private sector banks have been huge underperformers. And I'm not talking of the breakouts also which have happened, because even if you talk of relative breakouts, the percentage gains post a breakout is very meager for these stocks as compared to the time spent into consolidation. And even there are many large cap banking stocks which have actually been underperformers in terms of prices, and these stocks have nowhere close to their previous highs. So there is a potential upside for these stocks, more of a steady gain for these names. But the PSBs are the ones which are high beta in nature. They are a lot more, they can generate a lot more higher alpha as compared to the private sector banks. Now, and what we are talking of is private sector PSU banking stocks going through a second round of breakout. I call it second round because in 2022 second half is where these stocks had given an exceptional move. Many of the PSU banking stocks, and I'm talking of the mid-cap names, small-cap ones specifically, they'd gone through returns of 100% to 50% approximately in that time span. 4-5 months of consolidation. Move started back in the month of May, June for these names, and now they have confirmed a breakout of the previous 2022 highs. So which means that this is the second move of a breakout for the PSU banking stocks, and I believe it could be more stronger than the previous ones which you've seen in end of 2022.
The other pocket which saw a lot of action yesterday, again, those penny stocks. JP Power Ventures, GTL Infra, a lot of penny stocks actually yesterday. Then you got Infibeam Avenues, a lot of penny stocks, Reliance Power, they've started mushrooming up once again. Hemang, once upon a time, IRB Infra used to be the go-to stock. But in this rally, when all the construction stocks have made a comeback, infra stocks have made a comeback, IRB Infra, even though I think they've had a very large investor from one of the hedge funds, it's at the bottom of the barrel. Do you track this one?
See, mid-cap construction names, some of them have done pretty well, Nikunj. When you look at, one of the, let's say, Mumbai-based company, J. Kumar, and, couple of Andhra-based construction company, they have done reasonably well. But IRB, I honestly don't track in detail, but I can see that the performance of the company has been quite steady. Over the last 3 to 4 quarters, they are reporting about 720 odd crore kind of a profit, and net profit level 200 crore, and a lot of interesting order inflow. But somehow the stock has not performed in line with the sector or some of their peers. So I really don't have any specific view here.
Okay, those are a couple of these smaller names which actually held out in trade yesterday. A couple of other stocks which are going to be in focus as well. We've been flagging Bombay Dyeing, of course, after that deal for the Worli land parcel has finally been struck. It's a price consideration of 5,200 crore rupees, and it's a subsidiary of Sumitomo which has actually bought that land parcel. There's Adani Enterprises as well. That's going to be the other one in focus. Adani Wind has got a 5.2 megawatt wind turbine generator certification from WindGuard. So that's another stock in focus. There's IRCTC, which has got an MOU with MSRTC to enable the online bus booking via its bus booking portal now. There's, of course, Cummins as well, which has also unveiled one of the genset ranges for Delhi NCR markets. There's Bajaj Healthcare too, which has got an EIR from the US FDA for their API manufacturing facility in the state of Gujarat. So all of these stocks are going to be in focus. And then, of course, there's NBCC, which has bagged an 80 crore rupee sale order, which has signed an agreement to sell non-core Vizag asset. So that's another stock which is going to be in focus this morning too. But cement, Naresh, just wanted to get your perspective in. Yesterday too, you saw a good amount of spurt in some of the cement names. India Cements leading the charts with almost a 6% move. Any trading opportunity here, you think, in the near term?
So the first one has been Ultratech, which looks interesting. The stock has finally broken out into new 52-week highs, all-time highs. Did a pause also in the last few sessions. So that's a stock which should go towards the 10,000 mark, would have a stop loss below 8,400. The next are the smaller names which have done really well from the mid-cap space. But India Cements is interesting for the fact that although the stock is highly volatile, but the stock is now testing that 255, 260 mark, which has been the problem zone for the last almost 1.5, 2 years. It did see a spike to 300 in 2022. But every bounce in 2022 after that got hit at 255, 260. In the last 2 months also, we've made two tops around 255, 260. If it sustains above that, we could get a dash towards 300 levels. So I would go with say Ultratech Cement and then an India Cement, which would be one should be large cap and one should be high risk mid cap.
Right. Okay, that's the take then coming in on, some of these cement names right now. Let's take stock of what else has been happening in the market. Of course, you are seeing that sporadic rebound coming in for, some of the IT plays. And pharma is the other one, right, Hemang, which has also been seeing buying and not now, almost for a month now. You think any opportunities here to invest in?
Only, I think a very smart pullback by some of the pharma names and prominent ones. What we like at this point are Dr. Reddy's and Aurobindo Pharma. Aurobindo in particular is seeing a lot of traction, I think, in the last 3 months or so, both in terms of their operating performance and the stock price performance, both. It's done exceptionally well. Some of the mid-cap names like Laurus Lab, Granules, they continue to look okay, but one should really look at that as a tactical play because the entire, the API segment that they are operating in, things are not that clear. But I think as a short term, maybe 3 to 6 months kind of a time frame, these two names are looking quite interesting.
All right, sure thing. Let's also get in a sense as to, what are some of the stocks that are on the brokerage radar this morning. And you've got a whole host of stocks that are in the spotlight. Container Corp, for instance, is on Jefferies' radar. They've got a buy rating. They've upped the target price as well, saying that road to rail cargo shift is seeing quite a bit of traction. Indigo or Interglobe Aviation is on UBS's radar. They've got a buy rating there with a 3,300 rupee target price, saying that overall the Indian airline capacity as well is likely to increase. Just wanted to get in your take then, Hemang, because there is that report from Jefferies on hotel versus airlines talking about how both are going to benefit from the domestic macros having slower supply additions in the near term. What's your outlook within this entire space?
So hospitality, hotels, I think continues to boom. We are seeing the occupancy levels, and as we approach the Diwali holidays, the winter holidays, I think things are going to heat up even further. Some of them have also expanded their capacity. So Lemon Tree, Indian hotels, maybe some of the smaller hotels. I think one IPO also is being launched today of the hotel company. So I think that space continues to invite a lot of investor attention. Indian hotels and Lemon Tree are our preferred picks. In terms of airlines, not too many options. Indigo is by far the largest player. I think the only issue that we recently saw was that, with their Neo engines and, some issues and how quickly they will be able to find a replacement because they have about 120, aircrafts with that engine. So that is something that we will have to watch out for. Also, the crude price is actually shot up, right? So I think Indigo, maybe if you have a correction of 5 to 7%, but hotel definitely continues to be the good play at this point of time.
All right, let's listen in then to Vineet Samre and Pankaj Murarka. They talk about some of the top sectors that they're positive on.
Even if the margins were to come off a bit, but I think the growth metrics would be there. The valuations are pretty reasonable, and what we talk about the economic growth, I think that should be played through the banking sector overall. Now the choice can be how one has to allocate between the banking and the non-banking financial companies. I mean, that is left to each one's individual assessment, but I think this is a good sector to own. I keep talking about IT as one of the sectors which I generally have a positive bias towards because of a simple fact that this is a very strong cash generating sector, and more importantly, this is a sector which also distributes a large part of the profit back to the shareholders.
Headwinds in both the sectors are behind. We are seeing in healthcare or pharma, we are seeing earnings growth coming back very strongly this year onwards. So pharma companies and aggregate as a sector will deliver strong earnings growth starting this year. And likewise for the IT, I think the worst of the headwinds are behind, and from second half of this year onwards, we'll start seeing growth coming back to the sector. So clearly, from a relative basis, we find much more value in IT and pharma, and we are clearly taking money off some of these sectors which have done exceedingly well over the last, let's say, 18 months, which is essentially financials and capital goods, and putting that money to work into IT and pharma.
Suresh, the other big one which is worth revisiting again and again, I think is Indiabulls Housing Finance. What a move, what a uptake, then what a crack, and then what a comeback.
So I remember discussing yesterday also, day before that, if somebody has the risk appetite, 160, 170 is a retest. The bounce back was pretty sharp. And why is it interesting is the fact that on very few stocks have actually reclaimed the close on, or say the opening price of 12th September, which is where we saw the big downtick. So out here, the high on that day was 191. 191, the stock came almost closer to 189 yesterday. So it almost engulfed the move of the big downtick. So that shows a lot of strength. The only problem is the stock remains in derivative band, so one cannot take it in derivatives. One has to take it in cash. Technically, the trend is very clear out here. 160, 170 was the previous resistance. Retested it, and now is again trying to make a comeback. Now one can still be a buyer with a risk appetite. Stop loss now is below 170, so that's a deep stop loss. But technically, the stock has made that 8 to 12 months of consolidation and now started to trend up. Could go back all the way to 200, 230 levels, which is where it started falling from before. So technically, the structure is pretty positive.
Hemang, क्या हो रहा है Indiabulls में? What is happening?
So Nikunj, as we all know, it's been a jinx stock, and a lot of these stories have come about in terms of somebody taking over the stake, the existing promoters exiting, etc., etc. But latest what we've heard is that there is going to be a capital infusion of about 20 to 22,000 crore in the company, and that would be at a significant premium, which will be book value accretive, and post that, once you have a clean management and a substantial capital, and the fact of the matter is that they have a very decent book size. Of course, a part of the portfolio was subprime, and there were asset quality related issues. But I think a large part of that is now sorted out. And once you have this kind of a infusion and takeover, there can be some sort of a re-rating. Like for example, Divan Housing, when Piramal took over, there was an interesting opportunity in terms of playing that. So I think Indiabulls, you could see that. But as I said before, a large part of this is known in the market. The stock price also reflects that it's pretty much getting discounted. So how much more upside is anybody's guess? But I think this is what is driving the stock.
Okay.